Greetings, Jonathan. Camarda. As we glide into Q4, a lot of headlines out there. We'll start with the government shutdown. Hasn't really had an effect, you might have noticed, on the markets. But there are pockets of economic data that's starting to pile up that we're missing from the mosaic, so we'll stay tuned to that. Moving right along, equities continue to move up and to the right, really ignoring the seasonal weak period of time from August to September. Best performing sectors, you guessed it, technologies with the AI theme, your discretionaries, communications, utilities, not your father's utilities, as the old Cadillac commercial would say, with the AI infrastructure data center build-outs. Also building up some of your utility costs if you're watching your bills, but utility certainly more of an aggressive sector now. And then healthcare, biotechs and as such, surging from the back on that rail on a sloppy track year to date. So looking pretty good with staples, builders, energies holding up the bottom there. On the fixed income, quite fascinating. If you look over the last year on the long end of the curve from 7-year, 10-year beyond, you're looking at, especially 10-year and beyond, from low fours to the high fours, much higher than last year, which is why in like active capital preservation and such, we've been nesting in the short term, fixed income, because again, rates are down from over the last year from the upper 3.9s to the 3.6s. So we've been really overweighting there to get the benefit of a decent yield and certainly favorable principal action there. So that's something to watch as well. Now the dollar's gotten off the mat. This is seasonally a strong time for the year, for the dollar, so you want to watch that, but it is surging versus the euro, the yen, the pound, the Aussie, the Canadian dollar, New Zealand. I go on and on, but the dollar's going up. So that creates some headwinds, especially for your large cap multinationals. And just in time, because the month of October, which gets a bad rap, but is usually up, by the way, beginning of the month and end of the month, usually for October is strong. That middle Oreo soft part of that month, generally we have turbulence, and that's where we're entering now if you look at the calendar. All right, it's for you extending file returners. It's coming up that mid-October 15th. The market gets a little turbulent. As I'm filming this, we just got a headline and the market is down, I think 1% as we speak, in the daily soap opera. So just wanted to give you a heads up there. As we start to look, precious metals, gold, obviously a lot of headlines. And gold really, from 22, with a lot of these global banks starting to buy gold on potentially de-dollarizing, however you want to put it. It's very interesting as after hours when I watch gold surges with, especially coming from the Asian to China markets and such. So very interesting there. Now, we'll say this, because we have gold in most of our strategies. Of course, it's never enough when it's going up as far as when you look at the headlines. However, really from 2021, the market equities killed gold. From 22 in the bear market, obviously gold outperformed. 23 into 24, right? Gold severely underperformed equities, and in 24, about mid-year, Q2 of 24, outperformed, and then certainly during a tariff tantrum, right, early this year, but then underperformed pretty significantly since April. But gold is definitely a good position to have in our strategies. Now, I will say as a caveat, last two bull runs in gold, 2012 and 2020, ended with severe pullbacks. This may be different. This time may be different. Prove me wrong, as they say. We'll see. But we do continue to like the shiny stuff as we start to look at those, especially those after-hour purchases. But again, within a well-allocated strategy. Again, as we start to look, again, growth and momentum outperforming value at this point. Domestic outperforming international. So we do like that. Emerging markets starting to creep up versus, developed markets. So we are watching that as well. Again, how strong can that be? Well, is that dollar move to the upside? Temporary to allow emerging markets to go higher, because most of their debt's denominated in dollars. We shall see. And again, so as we start to look, GDP quarter over quarter in the upper threes, the U.S. looking strong there, but again, 26 may present different challenges. So as we kind of pull back the time frame to currently, we hear a lot of conjecture out there, a lot of podcasters, there's so much social media about the markets reaching crazy times, 1990s tulips, etc. But here's the thing, we just had a pullback in the spring pretty hard, you might have remembered, and 2022 was a full-on bear market after COVID in 2020. We're kind of in a secular bull, though, since the 2010s. So it's very interesting, though, the narrative. Market keeps going up and to the right, however. So again, we will watch that. We always have our foot near the brake and our hands on the wheel. If that NASCAR left-hand turn turns into a Monaco F1 right kind of hairpin turn, But again, you always want to be balanced. And most analysts, because a lot of the folks you're watching there sometimes on these Instagrams, TikToks, and YouTubes, they're not really analysts. They're talking about things that necessarily they're not experts in, but most analysts look when they do forward forecasting of earnings, not too terribly overvalued. And again, there is a lot of CapEx spending in AI and such, so there is real questions of does that start to slow down and what kind of effect that'll have, and certainly could have pullbacks. But again, the one thing I would say is when you talk to your PWA, we talk to your advisor, your risk tolerance is the most important thing. Your speedometer and odometer, as far as in your life, your risk tolerance. The macro activity is managed in the lion's share of these strategies where we adjust to the day-to-day, week-to-week, and month-to-month. So you just want to make sure that, again, slipper fits what your situation, the curve of your foot, as far as what you're looking for outcomes. And we will stay, as always, eternally vigilant. Stay frosty. Hopefully, your football team is still in contention. And unlike me, your baseball team, my Yankees, are out as well. And until next time, again, we appreciate your trust, and we do take that very seriously. Jonathan Camarda, pleasure to serve.